Think being a digital nomad is all about working from beaches and cafes? Think again. One mistake with your taxes and residency and your free lifestyle can quickly turn into a nightmare. And I'm talking serious money owed, fines, or worse. But with some simple planning, you can legally keep way more of what you earn while still hopping around the world freely. Let me show you how. Being a nomad sounds amazing on paper. Travel, freedom, work from anywhere. But taxes don't care about your lifestyle. Every country has rules about where you're a resident and what income they can tax. And yes, even if you're bouncing around on short-term tourist visas, you're not magically exempt. Most countries treat you as a tax resident if you spend roughly half the year there. But it's not just about days. Family, property, bank accounts, even your electoral roll can matter. Ignore it and you could end up paying thousands in back taxes. So, what's the solution? It's actually quite simple. Just pick a place that works for you. Ideally, a low-tax jurisdiction that doesn't tax foreign income, and use it as a base. You should aim to become tax resident there, ideally by spending at least half the year there, and then you're free to hop around the world for the other half of the year. Some countries actively welcome remote workers with special visas. These let you work legally, and in some cases even offer tax benefits. This isn't about finding the cheapest place to crash. It's about protecting your money and avoiding headaches like frozen bank accounts or being chased by tax authorities. Having a tax residency base can make life much easier when it comes to finances, banking, and avoiding costly tax audits. However, even if your base is low tax, spending too much time in high-tax countries could still cost you. Say you're based in the UAE with zero income tax, but still own a house or car back home in Australia. Australia could still see you as a deemed resident and hit you with tens of thousands in extra tax. Further, if you spend too much time in high-tax jurisdictions throughout the year, they may try to claim part of your income as locally sourced and tax you at high rates on this portion. The golden rule? Limit your days in high-tax countries, cut unnecessary ties, and keep detailed records: flights, accommodation, passports. Authorities use these to check your residency, so don't get sloppy. This doesn't mean that you can't go to higher tax countries or visit family. It just means that you need to plan the number of days you spend there per year and the work you do whilst you're there. Generally, the less work that you do whilst physically in these countries, the better. Once your base is sorted, it's time to think about your income. Just freelancing from country to country may not offer the biggest savings. The big advantage comes when you set up a proper company or legal entity in a low-tax or territorial jurisdiction like Singapore, Hong Kong, or Panama. You take a legal salary to cover living costs and leave the rest in the company, making sure that it's taxed minimally or deferred. Keep personal and business income separate. Your personal tax only hits what you take out. This is how high-earning nomads protect themselves and keep more of their income. It becomes a bit more complicated for US citizens, but even then it's manageable and can lead to large savings. If you earn across multiple countries, documentation becomes even more important. You need to be careful where you invoice from and where your company could be deemed as legally based. One wrong move and you could trigger tax liability. Good planning here saves big money. If you hold crypto or other investments, careful planning is also essential. Long-term holdings can get lower capital gains tax rates. Some countries even offer exemptions or special treatment. Structuring this correctly through companies or jurisdictions can reduce taxable events and save you a lot of money. It's important to note, however, that none of these strategies I have spoken about work if you break the law. Tourist visas rarely allow remote work, and tax evasion may lead to fines, back taxes, or criminal charges. Tax optimization, however, is very different from tax evasion, and it is legal and very effective when done properly. A qualified advisor familiar with nomads is worth their weight in gold. They can set up your structures, track residency, maximize deductions, and guide investment and crypto planning. Most clients pay a fraction of what they save by refining their tax strategy. At the end of the day, being a digital nomad doesn't mean ignoring taxes. It's about planning smart, structuring properly, keeping records, and getting the right advice. Do it right and you keep more of your money, travel freely, and can continue to live the dream.